There's been a sharp surge in gold loans in the recent years. While one may think that this is natural as gold prices have been soaring to record highs, but there seems to be a dark side to it as well, as the RBI has started to raise red flags on how these loans are given out. Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra, and joining in with me on this special edition is Tina Jain Kaushal, the editor of Money Today. Remember, in the month of March, it was IIFL Finance which was asked to immediately stop its gold loan operations, as the regulator had found lapses in how the company really handled its loans. Now, why is the RBI really concerned about the way these gold loans are being handled? Does it really impact consumers like you and me? And if yes, then how exactly so? That's what we will aim to understand in this video edition today. Tina, first of all, let's kickstart by understanding what has really happened thus far. In the month of March, we did see that IIFL Finance was given this stern warning from the RBI to stop its gold loan operations completely. To begin by telling us what exactly were the concerns that the RBI had raised as far as IIFL Finance was concerned.
Hi Sakshi. So RBI raised the red flags in case of IIFL Finance, and it cited that there were serious deviations in the way gold or loans operations were handled. So one of the concerns raised by RBI was in assaying and certifying the gold loan. So the gold which was valued at the branch was different from the gold valued at the auction time. So for example, if the gold was valued at 20 carat at the auction, it was found that it was at the branch level auction, it was given the certification of 22 carat. So there was deviation in the how loan was getting valued, and that was the reason loan to value ratio was also getting breached, which was a very serious concern for RBI, because RBI says that gold loan should not go in excess of 75%. But here when you value gold more than its worth, then you are breaching the loan to value ratio. And second important thing was which was found in IIFL Finance case was cash loan was given in excess of rupees 20,000, and RBI categorically says that the cash loan should not be more than 20,000. So that was one of the reason IIFL Finance was given a notice by the regulator. And another third reason was that standard deviation were found in the way auctions were taking place. The standard procedure was not getting followed, and that raised the alarm in case of RBI, because here in case of gold loan we have very small customers, very farmers and very small people who don't have access to bank accounts coming and pledging their loans. So these were the factors that triggered RBI in March to take action against IIFL Finance.
Absolutely. And after this, Tina really did, you can go back to see that article where Tina really found out what were the key lapses that were occurring in the industry-wide gold loans that were being given out as well. And after that, as a Business Today impact, we have seen that the RBI, the regulator, has again reiterated for both banks and for NBFCs to now cap the cash loans at 20,000 rupees, which is a clear directive for gold loans, because most of these gold loans are given out in cash loans format as well. Now, Tina, help us first understand, to get a broader understanding, how has the gold loan market really grown over the last few years, to really get an understanding of whether there has been a surging demand in this space.
So, well Sakshi, currently gold loan market stands at 6 trillion, and in 2010 it was somewhere 2013 it was somewhere 2 trillion. So we can see that over the period of 10 years it has grown at the CAGR of around 12%. And if I talk about post-COVID period, the jump is very sharp. Post-COVID, if I take the period of last 3 years, the CAGR is of more than 22%. So that was the kind of growth which is seen in gold loan. And because of the demand increase, especially after post-COVID, there is stiff competition also in the market, and all these players are jostling for customers available in the market. So definitely there is a boom in the gold loan market, I will say.
Absolutely. Now tell us, Tina, what is the market gold loan outstanding as far as both the banks and the NBFCs are concerned, and currently does it really raise a concern with the outstanding gold loan amount?
So currently the market size of gold loan is 6 trillion, which is 6 lakh crore. And if I talk about the NPA, if I talk about the players of top 4 NBFCs, NPA was 1.8% in financial year 21 and it was 2.9% in financial year 22. We saw a jump during this period, but now it has again come down to 2.15%. So yes, the percentage is not very high, and moreover gold loan as a total of personal loan portfolio is mere around 2 to 3%. So no, there is not a big trigger when we talk about gold loan, because the size is small, but the fact that the procedural issues have been raised and the fact that small borrowers are concerned with it, it has to be addressed, and that's why RBI has raised flags in case of gold loans.
Do you also see, Tina, the demand for gold loans further rising with the skyrocketing gold price?
Definitely, because gold prices are directly proportional to the gold loan book, because your loan to value increases when the gold price increase. So maybe you were able to take loan of 75 rupees out of every gold worth rupees 100. When the gold price rise, you might be able to get 80 rupees. So it's directly proportional to the value of the gold, and we have seen that gold has given a return of around 20% in the last 1 year. So definitely gold loan book has grown up, and we are talking about rise in gold loan further. So if it goes up, we will definitely see more demand for gold loan, and that is the another reason that this whole segment has caught the eye of the regulator.
Absolutely, but you also think that with RBI clamping down on such cash loans, this could dissuade customers from taking loans now?
So yeah, large chunk of people go for cash loan, but what I see is what it encourages players is to give loans in the bank account of the customer. So maybe people who want more loan, more than 20,000, they will be encouraged to go through the proper banking channel, and the transparency in the system is always welcomed. So even Manappuram Finance has issued a statement today, and they have said that we believe that the RBI has issued the said advisory to promote transparency and prevent potential disputes, and we support the same. We have always followed fully compliant processes, and we will continue to do so. We don't see the concerned advisory dissuading customers from obtaining gold loans. So what I foresee is it will encourage customers to go for the banking channel, and the players also will try to educate customers that loan should be taken through the proper banking channel. And many banks right now are doing this already. They are giving customers only through the banking channel. It is NBFCs which were following the cash route, and that's why RBI has given this notice to the NBFCs.
But the rural market, that is likely to be more impacted, because there will be many people who may not want the money to go to their banks, but they would prefer cash loans when it comes to mortgaging their gold.
I think it's more the habit of practice, because we have seen how banks have risen under Jan Dhan scheme. So banks have reached to almost all the nooks and corners of the country. It's only that the players have to pursue, and the customers have to understand that the transparency has to be brought, and I think it's more the change of habit also on the side of the customer and the side of the banks and NBFCs also to give through the proper banking channel. And till now you can have loan less than 20,000 in cash. That's not a problem. It's only above 20,000 that the banking channel will be required.
Right. But Tina, when we talk about the stock price impact in the stock markets for these gold loan companies or gold loan focused companies, it began with IIFL in March, and we did see that from a price of around 604 that IIFL Finance commanded on the 1st of March, there's been a sharp fall in the stock prices, and currently the stock is hovering at around 374 rupees odd, which actually means that from that time until now there has been a very sharp fall of at least 30% in the stock prices of IIFL Finance as well. If we look at the last 1 or 2 months chart, we will be able to get a clearer picture. Let's get that 1 and 3 months chart going for all the stock prices of IIFL Finance. So 1 month, you do know that the stock has slipped about 15%. Let's also look at the 3 month chart to see how the stock prices have fared. Of course, this happened in March. So till that time, till now, you can see a 35% sharp fall, but the vertical line is March 1st. But that's when the RBI had come out with the directive, and that was the trigger for the stock to fall. And not just that, even today, we did see both Manappuram Finance and Muthoot Finance seeing sharp fall. Of course, the markets were overall down in trade today. But the crash in Manappuram and Muthoot started from the word go in the markets today, when there was no sign of a sharp sell-off in the markets right now. So an 8% downtick, even though you do see slight recovery from the lowest point towards the end of the session. Manappuram ended lower by about almost 8% today at 165 odd rupees. Let's also look at Muthoot Finance and see how the price had fallen today. So it fell about 3.6 odd percent in trade. Of course, the beginning low was about 8 to 9% for this one as well. Tina, looking at the biggest players, if you could tell us, when it comes to cash loans, when it comes to biggest gold companies, which are the companies that are likely to be impacted with this directive of the RBI? And until then, we will be, of course, we will have to assess what could be the potential impact on the financials later on itself, even though the company's statement you did read that they are not, expecting any kind of an impact, because immediately they will switch over to the banking route as far as the loans are concerned. But for now, which are the biggest companies that we need to keep an eye out on?
So clearly, in case of NBFCs, one of the biggest player is Muthoot Finance, holding more than 40% share of the NBFC market, and Manappuram Finance is the next big player, and the another which you mentioned, IIFL Finance, is a very big player. In case of IIFL Finance, gold loan hold around 1/3 of its portfolio. In case of Muthoot Finance, it is around 80 to 85%. So given the kind of exposure they have to gold loan, that will also decide how much impact it can have on the portfolio, and the deeper dive is required to be done on how much loan these companies are providing in cash. So if the loan percentage given in cash is higher in case of these companies, it will be impacted more. So these are the three important players that are listed in the market, which comes into my mind as of now.
Okay, fair enough. Well, most of the experts who we've been speaking to do say that, it's difficult to say as far as how much will be the loss of customers for these companies going forward from here, if there could be any immediate impact in this current quarter that we will be looking at. Of course, there are some concerns on the operations and the AUM growth that could be impacted because of these stern steps taken by the RBI. But gold loans definitely needs a deep dive even further from here on. This is a developing story, and we at Business Today, since we started it all, we will continue to track every detail in this space, so that we can give you a clear picture as to how it is going to be progressing from here, and whether you as a gold loan borrower is something that you need to also keep an eye out on as well. Many thanks, Tina, for bringing us all these insights, and congratulations to you. After your deep dive into this story, the regulator has really taken notice of this and has been cognizant of the kind of move that we are seeing. So thank you so much, viewers, for joining us on this special edition. But do stay tuned, as we will continue to get you more action from the world of business and finance even beyond this.
Hello and welcome to Business Today Television. I am Siddharth Zarabi, and joining me today is JC Artigas, the Global Head of Research at the World Gold Council. Thank you very much for joining us, JC. The conversation is being held at the backdrop of what is happening to gold prices. And there are all manner of details and information that are coming out as to what is happening as far as gold is concerned. Give us an overview of where the gold market stands as of now.
Thank you so much for having me, by the way. And it's a very interesting time to be looking at the gold market for sure. The gold price actually has been rising significantly so far this year. And it has been on the back of a combination of various factors. But I would say primarily things that stand out are number one, central bank demand that continues to be strong. And number two, investment, in particular from Asia in general. So you can see some of that in India, but especially as well in places like China, where gold has been quite favored. You can combine that with some resilience as well on the jewelry market, in spite of some of the higher prices. Of course, the high price or the increase in the price of gold can have an effect on jewelry. But all things considered, partly because especially in emerging markets we have continued to see economic growth that has somewhat mitigated the effect. So overall, you can see a very interesting market today where there's still quite a bit of interest.
Since there is still quite a bit of interest, what is the outlook as far as prices are concerned? They've hit record